Good morning, students. Hope you all are doing well. Hope you have studied all the question answers. I think you might have read the whole concepts and conventions. Yesterday, when I was explaining the 14th that conservation, sorry, the convention, that video was stopped all of a sudden. That's why I was not able to explain that one fully. So today I am going to explain that one little bit. That convention of conservatism or prudence. Here I explained that what is the meaning. The Tamil word of prudence is vivegam. That means we should be just educated or as if we are wise. So when we take some decisions, we must be wise. So what is regarding that conservatism? Conservation. That means we have to protection. We have to give some protection. What it is? We have to be cautious. And we must be cautious about the loss, unexpected loss, or being safe. Okay? We must be safe. We must not be under any trouble. So, regarding all these things, we should be prudent. Okay, so when we prepare the records, business records or financial statements, or when we record the business transactions, we must anticipate for the loss. We must provide for the loss. Loss which are expected or unexpected maybe, okay, for loss, but not the income. If there is income, we should not consider, okay. We should consider the future loss. That is a simple word, okay. For this purpose only, if I explain this one with an example, you will understand that bad debts. Here, we are providing 1% from the sundry debtors. Sometimes some of our customers may not be able to pay our debts, pay back their debts to us. So that time we will be in great loss. For that purpose only, every year maybe 5% or 2% we are deducting from the sundry debtors. Okay, that is we are anticipating for the loss and we never consider any gain. For example, if we sell the fixed assets, the value may be increasing in future, but we never consider, we are entering only in the cost price. If there is any increase in the market price, that will be recovered only at the time of sales. Okay, when we sell that particular asset, if there is more amount, we can consider that as one the profit on sale of fixed asset. That will be entered. Until then, we never consider that increase in the value of price in the market. Okay, so we have to consider the loss but not consider the gain that arises. Okay, so you have understood this one. Now we will learn the accounting standards. Accounting standards. Accounting standards are similar to accounting principles. Understand? Accounting standards are also like accounting principles, that norms or that framework, the same thing only. But this should be followed throughout the world. The same accounting standard must be there, that one only followed worldwide, the whole world. So what we can do, we can compare our financial statements with the other financial statement, means the financial statements of other organizations. Because of this one only, that in the stock exchanges and all, they will provide the financial information of the companies. And stock exchanges, even the one who lives in abroad, he can access the financial statements of the companies situated in India. So it is because any person want to see this financial statement, everywhere it is same. In India, the same, and in America also, the financial statements will be the same. Why? Because we follow the accounting standards. There will be the accounting principles only. They are what we can say, no? They will standardize the accounting principles. That's our accounting standard. Okay? Standardize the accounting principles. Accounting principles are accounting concepts and conventions. So everything more or less same only. Okay? Accounting principles. So that is called accounting standards. We are standardizing the accounting principles. Now you will be studied that 14 points. They are the concepts and conventions. All these they will standardize by big organization. Okay, they will give the they will standardize them. These principles only must be followed. So there is one definition also given here. Okay, why we standardize these accounting principles? Just to ensure the consistency. What is the meaning consistency? Permanency, I told you, isn't it? Then comparability. I told we can compare. Maybe the same organization can compare the financial statements of 1 year with the other year, previous years. Okay, comparability. Or they can compare with other organizations also, or with the organization in abroad also. Then adequacy. The profit derived from the business or the financial position, everything will be adequate. So it will be accurate and adequate, correct it will be. Because we follow the rules and regulation, the norms, the condition or the principles. Then we can rely on the accounts, reliability. Nambagatanmai we can say, reliability. I can rely on that person's words. That means that whatever we say, that is, we can trust in them. Okay, that is reliability. All these can be made only if we standardize the accounting principles. Okay, that one definition is given. The accounting standards are codes of conduct. So they have given some codes, that is how these codes come? Imposed by law of different countries, or customs, tradition, the consistent, that the conventions, no, they come through customs only. Then, or professional bodies. These standards are given by professional bodies, maybe the Chartered Accountants of India. So, like that they will be providing this rules and regulation. Why? For the benefit of, for whom? For the benefit of public accountants. For the public accountants and accountants generally, all the accountants. Not only the public accountants, the government, chartered accountant, they are studying, no, CA. Those who study CA, not only for them, any accountant or for all the accountants. They are providing some codes of conduct that is imposed by either law or customs or professional bodies. For whom? For the benefit of the public accountants and accountants generally. Only one definition given, just you read and understand and keep. Okay. So now what is the need for accounting standards? Why it is needed? Here we are learning now. We can compare. Comparability is done. So comparison can be made, or comparison can be made then we can have a proper understanding of the financial statements. Each country, if they follow one standard, then we cannot understand all the financial statements of all the institutions all over the world. But here we have, since we have that standards, we can understand them clearly. Then we can compare them. Then there is uniform procedures and principles. Uniformity will be there. Then reliability. Reliability of the financial statements, because they follow the rules and regulation. If there is depreciation, whether they must provide, and that depreciation also is based on a particular method only. Okay, then the same method will be followed by that will be recommended by our Indian standard. So the same will be followed by all the business organizations. So the reliability of the financial statements can be increased. Then we can meet the legal requirements. Legal requirements, if there is any dispute or any case in the court of law, that these statements can be accepted. That can be accepted as the evidence in the court of law. So that legal requirements we can meet. All these are the needs. Okay, now international financial reporting standard, international level. International, this common we have learned. Now international and Indian we are going to learn. First, international financial reporting standards. Financial reporting standards. Who is issuing these standards? International standards. International Financial Reporting Standard, short form IFRS. So they are issued by whom? The International Accounting Standard Board. Okay, Accounting Standard Board. Who is issuing? That this International Financial Reporting Standards are issued by International Accounting Standard Board. One board, okay, that is only issuing. So they are issuing a set of international standards. International Accounting Standards. Okay, how particular transactions must be recorded and how the other events are recorded in the books of accounts. So who is issuing? The main thing is who is issuing this International Financial Reporting Standards. International Financial Reporting Standards are issued by International Accounting Standard Board. Okay, now we will learn the next one, accounting standards in India. Accounting standards in India. Here in India, these accounting standards are issued by Institute of Chartered Accountants of India. Understood? Institute of Chartered Accountants. Many of you have that intention to learn this chartered accountant, isn't it? To become a chartered accountant. CA. So, if you pass that CA exam, you have to register your certificate in this institution only. ICAI. Okay, Institute of Chartered Accountants of India. Here itself given chartered accountants. Okay, all the chartered accountants, those who pass in that particular examination, final examination, they have to register their name in this institution. They become the member of this institution. Okay, Institute of Chartered Accountants of India. So that is the highest one authority who is eligible to issue standards of accounting in India. Okay, the standards of accounting are accounting standards in India. So they are issuing the accounting standard. They have one board. They have established one board. That board, accounting standard board. Accounting standard board. In the international also they have set a board, no? International Accounting Standard Board. Here we have Accounting Standard Board. Maybe in India. Okay, Indian Accounting Standard Board. If they write Indian, it will become same. That's why they have not given. Okay, ASB. Accounting Standard Board. That was established on 21st April to 1977. That Indian Accounting Standard, that is written as Indian Accounting Standard. Otherwise that in standard board, if we write International Accounting Standard Board, it will become. Okay, that's why they write Indian means IND, Indian Accounting Standard. So this Indian Accounting Standards are based on which one? International Accounting Standards. Okay, International Accounting Standards, because they have internationally they have set some standards that must be followed by all the countries in the world. So Indian Accounting Standard also based on the International Accounting Standards only. But we have modified this Indian Accounting Standards. We have some customs, isn't it? So it is based on our customs, then our traditions and our practices. We have some modifications. Now in India at present, all very big companies, they follow this accounting standard rules only. That Indian accounting standard rules they follow. But where some small companies, here this Indian accounting standard rules are followed by very big companies. But the small companies, they are not followed, they are not asked to follow them, but they as per their wish. Okay, but simply that accounting standard is there, accounting standard, that what it is, accounting principles, that means the concepts, conventions, that must be followed. Or double entry system, dual aspect, business entity, all these accounting standards must be followed by the small companies. Understood? So, all these standards we have learned. Now I am planning to go to the next lesson. Before that, I will just mark and give the questions. The business is liable to the proprietor of the business in respect of capital introduced by the person according to which one? Money measurement, business entity, cost concept, real aspect. Business entity, isn't it? The concept which assumes that a business will last indefinitely is business entity, going concern, conservatism, periodicity. Going concern, GAAP, generally accepted accounting principles. Rule of stock valuation, cost price or realizable value, whichever is lower, is based on the accounting principle of materiality, money measurement, conservatism, accrual. Here conservatism, because cost price, that fixed asset I told, cost price or realizable value, whichever is lower. So what is lower only will be entered. In India, accounting standards are issued by that Reserve Bank, cost CMAI, Supreme Court, Institute of Chartered Accountants of India. Then we have marked 2 questions. Then revenue recognition, concept. Under that concept, what is given? Now I will say some of the points now. There is no separate revenue recognition concept. Okay, this will come under this accrual concept. Here you see revenue is recognized when it is earned and expenses are recognized when they are incurred. So recognized means revenue is considered when it is earned and expenses are considered when they are incurred, not actually paid. So you have to write first point, then all expenses and revenue related to the accounting period are to be considered irrespective of the fact that whether revenues are received in cash or not and whether expenses are paid in cash or not. So on this one you can write these two sentences. Okay. The next question. That is what is full disclosure principle of accounting? That is also one heading. Full disclosure, convention of full disclosure. It implies that the accounts must be prepared honestly and all material information should be disclosed in the accounting statement. Second point, this is important because the management is different from the owners in most of the organizations. Then this is very important. Even if you don't write this one, no problem. Write this one. The disclosure should be full, fair and adequate so that the users of the financial statements can make correct assessment about the financial position and performance of the business unit. This is the previous point. This is the previous point. Convention of consistency. Consistency convention implies means says that or includes that, we can say that the accounting policies must be followed consistently from one accounting period to another. That is the first point. Okay. Then you can write the example. Okay, this one. These two you can write. This one also you can write. The results of different years will be comparable only when same accounting policies are followed from year to year. 2 points you can write, one example also you can write. Okay. What is matching concept? Why should a business concern follow this concept? According to this concept, you are to write matching concept. Okay. Revenues during an accounting period are matched with expenses incurred during that period to earn the revenue during that period. One point. Then second point, this concept is based on accrual concept and periodicity concept. Then write the third point here. Periodicity concept fixes the time frame for measuring. No, this one no need. Okay. Write this one. All expenses paid during the period are not considered, but only the expenses related to the accounting period are considered. On the basis of this concept, adjustments are made for outstanding and prepaid expenses. 4 points. Okay. Whether you have marked this one, I don't remember. If you have not marked, now you mark. Only monetary transactions are recorded in accounting. Explain the statement. The second concept, money measurement concept. This concept implies that only this one, first point. Then second point, second para. Transactions which do not involve money will not be recorded in the books of accounts. For example, write this example. Okay, enough that much. Third one, business units last indefinitely mention and explain the concept on which the statement is based. You have to write that question and you have to write this statement is based on going concern concept. Okay. Going concern concept influences the accounting practices in relation to the valuation of assets and liabilities. The first point also you can write. It is the basic assumption that business is a going concern and will continue its operations for a foreseeable future. Then second point, going concern concept influences. Then it's on the last one, 3 point. Third point, assets are generally valued at historical cost. Any increase or decrease in the value of asset in the short period is ignored. All the 4 points you write. Last one, write a brief note on accounting standards. Accounting standards provide, first point, the framework and norms to be followed in accounting so that the financial statements of different enterprises become comparable. Then second point, it is necessary to standardize the accounting principles to ensure consistency, comparability, adequacy and reliability of financial reporting. Then if you need, you can write the definition. Okay, write the definition, then only gives that presentation will be very good. Okay, meaning, definition, then this point also you write. Accounting standards are written policy documents issued by the expert accounting body or by government or other regulatory body covering the aspects of recognition, measurement, treatment, presentation and disclosure of accounting transactions and events in the financial statements. This much will do. Okay students, we have completed this second chapter also. The third chapter is related to the journalizing. That is the first process in the preparation of financial accounting. Okay. That first process of accounting, first process is journalizing. There we are going to learn whatever we have learned in the first and second lesson only. Okay, now there we are going to start the problems. So just to read these two chapters other than the question answers and get ready to go to the third chapter. That one we will start in tomorrow's class. So some terms are given. If you are very interested in the third chapter, just you see and be ready to attend the tomorrow's class. Okay students, thank you very much. Learn your lessons.